Welcome back. I'm Ted Thomas, and I've been involved in the tax lien certificate and the tax deed business for about 30 years. I started out with tax lien certificates, and then I grew to tax defaulted properties. I'm going to tell you a lot about that in this series, but today the question I'm going to answer is this: is Ohio a tax lien state or is it a tax deed state? So kind of open up your mind, and I'll give you some information on that. And we'll talk not only in depth about Ohio, but I'm going to give you some money-making tips, teach you how to make money with tax lien certificates and tax deeds. And I'm also going to show you two very important things when I end this video of how to avoid making the biggest mistakes at the tax auctions. So hang in there for a little bit, and I'll be right back. Is Ohio a tax lien or a tax deed state? Well, let me tell you a little bit about the state so you have some ideas. First of all, the population's round number is about 11 million people. They have a lot of major counties there. Cuyahoga County is Cleveland. And then, of course, there's Franklin County, which is down around Columbus, and Hamilton County. Those are the big ones. There's a total of 88 counties in the state. So that means there could be 88 different ways to do tax lien certificates or tax deeds. All right, so 34 of those counties actually sell tax lien certificates, and they pay up to 18%, and that's an annualized rate of return. Now, the other counties, 54 of those, they're going to sell tax deeds. So I'm going to have to explain both of those different types of auctions to you, which I'm going to do. So kind of hang in there for a little bit. So the question I'm answering today is Ohio a tax lien or a tax deed state? So it actually does both. So why don't we call it a hybrid state that does both of those? All right, so first let's talk about tax liens and tax deeds and why on earth these counties even do anything with those. So why do they sell tax lien certificates? Because they need money. And what do they need money for? Well, those 34 counties need money to pay for the police department, pay for the fire department. Of course, all the schools and school teachers get paid from the county. And of course, we have fire departments and we have, of course, police force. All those things are paid for by the county. So the county needs money. So with tax lien certificates, when you raise your hand, you buy a certificate that will give you revenue. Now, it's revenue, whatever you invest, plus up to 18%. So you're not going to get a property when you buy a tax lien certificate. You do not get possession. What you get, and I'm just going to reach over here and get a piece of paper, what you get is a simple piece of paper which is called a tax lien certificate. Now that certificate gives you control of the property. It can't be sold, it can't be mortgaged, it can't be traded. Nothing happens with that certificate until it's paid. So you buy those certificates from the county, and then you earn a great rate of return. So let's kind of capsulize that. You invest your money with the county by buying the certificate, and then when the county gets paid, they're going to pay you back. Now, in the event that you didn't get paid back, well, then you're going to get a big reward. And the big reward is if you don't get paid on a tax certificate, you'll actually get the property without a mortgage. So tax lien certificates are a predictable, certain, and secure investment. Now, people like tax lien certificates, especially older folks, kind of like the gray-haired types and bald-haired people. They like tax lien certificates because they're so predictable, certain, and secure, and they know they're going to make up to 18% depending upon the bidding process. All right, so that's tax lien certificates. Now, the other 54 counties in Ohio, they're actually not selling anything, they're actually confiscating property. So that means they're going to have a tax deed. So what those counties do in the event that the property owner doesn't pay their tax, now they're in delinquency, so they send them notices. Now those notices go out pretty regular, they're registered mail, and it's a due process telling the property owner that if they don't pay their taxes, the county is actually going to confiscate. That is, they're going to take the property, they're going to seize the property, and they'll evict the people that are in the property, and they'll sell it for back taxes. So now let me tell you that one again. So with a tax deed auction, what happens is the county is notifying the property owner, if you don't pay your taxes, they're going to come and confiscate the property, and they actually move the people out. They evict you from the property. Now that property will also be sold without a mortgage. All right, so now let's think about this. If you go to a tax lien certificate auction and they don't pay you, you're going to get a property with no mortgage. That's kind of nice. The mortgage is wiped out. Now that doesn't mean that the county comes along and tears up the mortgage. They just push it off the property so the property is clear when you buy it. the person that signed the promissory note, which is the mortgage, they are signatory. That signatory to that loan, they still own the loan. All right, now let's go back to those tax deeds. Now, tax deeds, the local county is confiscating the property, and they're going to sell that property, and they'll probably have a starting bid somewhere around the back taxes plus the late fees, and they'll sell that property at auction to the highest bidder, and they'll sell it without a mortgage. So in both cases, you're buying a property without a mortgage. How about that? Okay, so if the property owner doesn't pay the county, they'll either issue a tax lien certificate or they'll start the process of confiscating the property to resell it at auction. So now you understand tax liens a little bit, tax deeds a little bit, and this is one of those unusual states that I just call it a hybrid because they do both. Nothing really unusual about the state. They sell tax liens and tax deeds, whereas most states, it's just either one or the other. Well, now you know it actually do both. Now, the auctions can be online or they can be offline. It's going to be up to the county. So you're probably going to have to learn both ways to do it. Now, I prefer the offline auctions because the county usually does those. Now, the online auctions, they hire auctioneers. And oh boy, that makes it really pricey because the auctioneers, number one, push the price up and the auctioneers get a fee for doing that. So if you're looking for high yield investments, both of these are high yield investments. Now, I didn't make the rules. The legislature makes the rules. The county, the legislature for the state makes the rules, and then the county enforces all that. So in Arizona, the legislature said you can pay up to 16%. Florida, they say up to 18%. Illinois, up to 36%. So the legislature of the state makes the rule, and then the county has to execute it and administer the whole thing. All right, so now in Ohio, you got 88 counties. It's going to be up to you which one you buy. You can buy both. You can buy tax liens and you can buy tax deeds. You can do either one. You can do them offline. You can do them online. Now, what's the county trying to do? The county is trying to get the property taxes. Why? Because that's what pays all the bills. The county needs money to run. So money is like the lubricant that keeps all the wheels of government going. And in order to get that money in, they sell tax lien certificates or they confiscate the properties. So you're probably getting both of the ideas right now. Okay, remember, if they don't collect the money, what's the county going to do? They won't be able to pay for the court system. They won't be able to pay for the jails. They wouldn't be able to pay for the police. Who would fix the roads? None of that stuff would happen. So now in Ohio, they have two very effective systems. One's the tax lien certificate, and the other is they can confiscate the property. Now, here's what you don't want to think. Everybody says, oh, it's an auction, so that everything's a bargain. Well, I'm going to tell you, everything's a bargain if you know what you're doing. You need to be careful at these auctions. Well, you need to be careful when you're buying at a tax defaulted auction, because whatever price you pay, that auctioneer company, what they're going to do is they're going to add 10 or 12% to the price. So if you spend $50,000, they're going to add another 10% to it, so you pay the auctioneer guys. That's going to come out of your pocket. All right, now everybody thinks it's a bargain hunter's dream. Listen, auctions are auctions. What you get is what you get. Now, it's not a get-rich-quick scheme. So if you know how to take care of properties and fix them, well, some of those tax defaulted properties have been used and abused. Yeah, some of them haven't taken care of at all. Sometimes I take 100 hours or 200 or 500 hours to fix one of those. So you need to know what you're doing at those auctions. Of course, we teach you all that in our class material, but I'm just telling you ahead of time, these are not A properties. You're not buying country club properties. You're buying C and D properties. So I tell people, buy them low and sell them low and pass and let someone else go ahead and make the big money in the deal. So buy it low and sell them low, because there's so many properties at auctions. Now, I promised you I'd tell you about a couple of mistakes, so I want to tell you now, these are a couple of mistakes that you really need to make sure you avoid. So if you're a newcomer and you're going to auctions, there's a couple of things that you don't want to do, and I see it happen every day. Number one, you don't want to purchase any property at the auction if you haven't seen it. Now, what do I mean by that? Look, if you're trying to buy a property in another city or town and you haven't looked at it and you're buying online or whatever, you need to have looked at it. What if it burned down? What if there was a big storm, a tornado came by and ruined the property? All those things happen. They have floods, rivers flood and so on. So you don't want to buy property you haven't seen. Now, the other big mistake I watch people do is they get to an auction, they're really eager, they want to do a good job, they're motivated, and they want to buy something. Well, that's a good idea. However, you don't want to start bidding on properties You don't want to bid on a property unless you know you have a good exit strategy. Now, it takes a little while to develop an exit strategy. First of all, you have to know what the property's worth, what it's going to sell for. And if you don't know that, you don't want to bid on it because you might bid too high, and now you're not going to be able to sell it. Now, what are you going to do with that property? A big problem. So those are two big mistakes that people make that I don't want you to do. Okay, that's a good question that came up, and the question is, are you able to transfer your certificate? Yes. If you have a certificate with your name on it, you want to transfer it to a family member or someone else, yes, they're transferable. Not a problem. The county understands that because people change all the time. Some people put them in a trust for somebody else and whatever. Yes, you can do that. Oh, don't worry about that. One of the things that people worry about, are you pushing people out of your home? Well, if you're buying tax lien certificates, you're really a benevolent person, and the county that sells tax lien certificates is very benevolent because you don't get the property. You don't get possession with a tax lien certificate. Now, with a tax deed, when it goes, someone probably did get pushed out of their home, but you're never going to have a chance to do that because you're going to buy directly from the county. So when you go to a tax deed auction, you're not buying from a homeowner, you're buying directly from the county. So I bought many properties in Cuyahoga County, which is Cleveland, and down in Columbus, which is Franklin County. When I go to that auction and I buy a property, I'm buying it directly from the county, and you'll be doing the same thing. All right, now, I'm going to run out of time. If you're learning something from these videos, I'd like you to join my community, and when you do that, I have the perfect thing for you. I'm going to give you a gift, and the gift is worth a lot of money, but I'm actually just going to give it to you, and it's called a Safe Haven. It's a wonderful learning system where you'll not only get narrative to learn, but you'll get videos to learn. It's going to be absolutely free, and when you register, just go below me to register, and I'm going to give you free as my gift the Safe Haven that you'll see pictured there.